Hi everyone, this is Jack Wong and from Empower Rangers Forex. And basically, what I would like to share with you is a price action study on Euro Dollar and our 1 hour chart. That would be 5th of September 2012. Okay, the date of recording is now 6th of September 9:23 Singaporean time, GMT +8. So in front of me, this is the hourly chart on euro dollar. As you can see, the price action was a bit funny yesterday, simply because the the move at the beginning of the session, the Asian session was bearish. Then suddenly there was a big U-turn in between the London session, and at the end of the day, euro dollar closed at 1.26. Okay, after the New York session. It's very interesting to note that if I were to look at the way to trade this chart simply based on, let's say, the moving average crossover, what I can show you here is that I have got two moving averages, the red one and the yellow one. So let's see what the red one and the yellow one are. Okay, so if I turn on my indicator chart, you can see that my red is actually 8 day simple moving average, or eight period simple moving average, and the other one, which is the yellow, it is 21. Why is it 8 and 21? Well, I can debate with anybody who is using moving average crossover until the cow comes home, which is my very favorite phrase. It's simply because 821 is a pair with Fibonacci numbers. Okay, and I have seen personally many variation of the moving average parameters. Just to give you some ideas, I've seen, for example, 1334, okay, 821, which is what you have seen here. I have also seen things like 5589, which is weird. I haven't seen anybody except one of my friends who used 5589 before. And most of the retail traders, on the other hand, they could probably use things like 1025, 5200, 5150. So you know that there are so many variations, and you can simply Google it, and you'll be able to find at least thousands of variations on how to use moving average crossover. This is not what I intend to show you here, because I know one thing. And what's the thing? The thing is that the big guys who actually move the pairs up and down without us knowing know exactly what moving averages we put. Unfortunately, the joke is that we do not know what moving averages they have on their chart. So that creates an unfair disadvantage from a retail trader perspective. So as far as I'm concerned, I don't really look at moving averages, simply because I know there is no point using something which they can see us what we are doing. Unfortunately, we cannot see what they are doing. Okay, so I propose to remove the moving averages here, and also the two bosses. What I wanted to show you is actually something I'm practicing by heart, which is called the price action method. And in the price action method, what we are looking for is essentially certain key levels where the big guys essentially know is the time for the pair to be reversed to the other side. Because if the majority of the folks, by looking at, let's say, the 4th of September session, euro dollar was pretty bearish. So one may think that, hey, this is a good time to sell euro dollar. And some people might even use fundamental to analyze the bearish movement of this pair. And you can say anything until the market proves you wrong. How many of you know what I'm talking about? So what we are looking for is, as I plot on the chart, certain key levels, um, and you can see that the price actually respected certain key levels. For example, when you look at the level 1.2510, you may wonder how come 1.2510 is one of the key level. And in fact, this is one of the levels the market makers or the big banks are looking at. And as you can see on the hourly chart, the pair actually reversed at this point, and all the way within a few hours shot up 110 pips all the way to almost 1.2620, which is another key level that a lot of the big guys would likely take profit because they have done enough for the day. So what I will encourage you to do is to take a closer look of the price action method, identify these key levels, and perhaps you'll be able to reap 100 pips within a few hours, even though you are only doing day trading. I'm not an advocate who are scalping the market for, let's say, 5 pips, 10 pips, or 20 pips for that year, for that period. To me, when we do scalping, it is totally too much effort for me, and I prefer to watch the price action and see where the big guys are going to turn the pair from down to up or from up to down. Okay, and this is what we call riding with the big guys and profit from the forex market. Okay, I hope that you enjoy my sharing, and this is Jack Wong from Empowered Ranger Forex. I'm signing off now, and bye bye.